Pankaj Pandey. He's the head of research. Pankaj, how do you look at IT stocks? Last week's Accenture commentary and followed by the kind of move that we saw on Infosys in the ADR market. How do you look at IT stocks?
Yeah, hi, good morning. Thanks for having me. I think overall our sense is that, well, yes, IT stocks have sort of underperformed. IT index is down about 15, 16 odd percent for this year. But our sense is that it is a good contraplay to the overall jittery valuations of AI-related trade, which is panning out globally. And our sense is that this is a time to sort of relook at IT stocks post healthy correction, because when we look at from a valuation perspective, valuation is at a 5-year low from for 1 year forward P multiples. And what we are particularly liking is something like, say, KPIT. Our sense is that this company should do well from here on, especially given its exposure towards Europe market. We have a target price of 1475 on the stock.
Pankaj, any worries on the FMCG part because of the Bangladesh situation? It's a small exposure that they have with respect to that market, but is that a worry at all?
So FMCG overall, we are very selective because overall sense is that the combination of volume plus pricing growth again could be probably mid to high single digit, whereas valuations are still sort of not so cheap. We are selectively liking something like, say, for example, Marico or Tata Consumer, where the food portfolio is growing in double digits, or even something like, say, for example, Asian Paints is also what we like. Given the fact that company is expected to deliver or has seen a 10% kind of a growth last quarter, and probably second half is also expected a similar 10% kind of a growth. And probably over the next 1 or 2 years, growth is expected to be in low double digits. So one needs to be very selective in the FMCG counter. I think Bangladesh issue, while yes, the companies have limited exposure, is not going to materially lead to price correction.
Pankaj, if I were to ask you, I mean, first off, I'm not sure whether you cover Vari, but this could be a big one, right? This acquisition of a company in the US, good backward integration, exposes them to raw material and good in terms of quantity as well. It's a decent quantity of raw material which they get exposure to as a result of this acquisition. How large is it from a strategic standpoint, in your opinion, if you track the counter?
So we don't track Vari, but our sense is that power and capital goods as a space should do well. I think last 1 year has not been really much in terms of price performance. In fact, what we like is something like, say, Tata Power, which again has got a very consolidated portfolio, right from transmission to generation. Also, they're talking big in terms of on the RE side. And also, overall sense is that probably nuclear power, since it has got opened up, this company is expected to sort of do a lot more better. So I think Tata Power is our top pick in the power space.
Also, the other one, viewers, is GE Vernova T&D. They've announced mega order win in the Khavda South region, and the project is going to be for the Adani Group, where they're going to set up a 2.5 gigawatt design as well as establishment, 500 kV VSC terminal station, which is going to be roughly 2.5 gigawatt in size. The order is likely to be in around the 10,000 crore rupee region. So that's a meaningful, significant order that they've won. The existing order book is around 13,000 crore. And therefore, this adds significantly to the visibility, viewers, in terms of top line. And that's an opinion coming from Nuvama as well. They remain positive. They've retained a buy. Pankaj, talk to us about T&D, and I'm not so sure again whether you cover GE Vernova T&D, but if not, how do you play this power story outside of a Tata Power? Is there any other play? Would it be the power financiers? Would it be would transmission and distribution be a good play with regard to power?
Our sense is that the HVDC as an opportunity in the transmission and distribution side is fairly significant, can become a lot more bigger going forward, because a typical HVDC project is somewhere about 20,000 odd crores. The equipment ordering is about half of it. Now you have three players there. One is Hitachi, the other one is G Vernova T&D, which has got the order, and then the third one is the Siemens Energy. All three companies trade at fairly rich multiples. What we like is Siemens Energy, that is where we have a coverage upon. So our sense is that this is one segment which could witness opportunities unfolding even going beyond 2030 because as we add more of renewable energy, HVDC as an opportunity is going to sort of become a lot more bigger. Uh, so we don't have a coverage on both the other two names, but Siemens Energy is what we would want to sort of play through this. So that is our pick in that space.
Okay, that's that.